And the sign language interpreter this morning is Gideon Miner. Every other Thursday, we bring you Money Matters, and it is about that time. And this beautiful Thursday, we have our guest from Absa Bank, who I'm going to be giving an opportunity to introduce himself. But he works in he is the Chief Investment Officer and Asset Management Sir, thank you very much for making time this morning. First and foremost, good morning, and kindly introduce yourself to our viewers.
Good morning, and thank you very much for having me.
Yes.
My name is Mwenda Rarama. I serve as the Chief Investment Officer for Absa Asset Management Limited, which is a subsidiary of Absa Bank. Our work is to deliver asset management products. That means your usual unit trust products, money market funds, and any other funds that you have in place. We also do money pensions and a couple of other investment items that we actually deal with, including offshore items. I've been in the industry for more than 15 years. Started off as a stockbroker, wore the red jackets, did my broking business, moved on now into asset management, which is what I do. I've worked in a couple of institutions that I have worked in those 15 years. But we have built a good institution at Absa Asset, which is started off in 2019 in Kenya. That institution has grown extensively, but that tells you also the experience that we have all over the industry has led to Absa building a very good institution that our clients can interact with, and we're happy to introduce that institution to your audience and also introduce the products that we offer to your audience.
Thank you very much, Mr. Mwenda. Before we talk more about Absa and the need to set up Absa Asset Management, what is asset management? This word has been thrown around so many times. Asset management. What is it about?
The financial assets are different. They are varied in terms of what they are. But the most basic in terms of financial assets is cash. So you need to manage cash. In other words, cash needs to earn something, because the biggest threat to cash is what we call inflation. The purchasing power of that 1,000 shillings disappears if you don't invest it. So you need to keep up with inflation. If you're not able to keep up with inflation, an item that you could buy yesterday, you'll not be able to buy it today. The only way you keep up with it is to figure out, how do I invest this money? How do I put this cash away? And whatever other asset you have. So what we manage are financial assets that starts off from cash all the way to your shares, bonds, and various other assets that are financial in nature. And we are in the business of managing those assets, allocating that money. So when you come to us and give us the cash, our main business is to know, what do we buy with this money? What financial asset do we buy with this money? That's the actual definition of financial asset management. So we can have the word financial ahead of it, so we're very clear. What we actually manage is largely financial assets, but we also do manage other assets which are not financial in nature. Depending on the fund, depending on what you're looking at. We do also have some funds that would have real estate in them, but largely what we manage are financial assets.
Because actually why I think it's sometimes confusing when you talk about asset management. The first thing, you go back to your commerce that you did in high school. There are fixed assets and non-fixed assets, so I think that's where the challenge sometimes comes in, because when somebody hears asset management, they're going to manage my houses and those types of assets. Let us go back to Absa. Who is Absa, and why was there a need to now create Absa Assets Management?
So Absa Bank is a Pan-African bank, a large Pan-African bank. We're very clear on the needs of the Africans that we serve, because we serve them across the African market. One of the things that we need to make sure as Africans is that we build businesses that can serve us, that speak to us. I'll give you a classic example of Kenya. Over the last 20-something years, since 2002, a lot of changes have happened in this country. Wealth has been created massively, whether it's real estate prices, whatever you look at it. Our Kenyan banks have grown extensively over the last 20-something years. A lot of that growth and a lot of that debt has driven purchase of wealth, whether it's real estate or any other asset that you look at. So that growth, of course, comes with the complexity of being able to manage this. So it was important, being a trusted brand, having walked the journey with the clients and built them through the same credits that they have given to everybody else. Most of the Kenyan wealth, because capital is allocated in different ways. it's difficult for you to have startup capital. It has to come from somewhere. In most cases, that comes from debt. As that debt has grown over the last 20-something years, Kenyans have grown wealthier. We're now in a place where you actually have some capital that you need to be managed in one or the other. So ABSA looked at it and said, over the last couple of years, we have also seen Kenyans lose a lot of money. Why? Because you now have the money, you need a way to allocate it. You need to figure out, how do I manage this money? You have sold a piece of land, you earn a bigger salary today, you have something of that salary. You need to figure out, where does this money go? So it's not just for banking purposes, but you have moved away from banking into trying to figure out, how does my money work for me? How do I manage these assets, whether financial or otherwise, a lot better. So it was important for ABSA to walk that journey with the customers and set up an asset manager who will bring in the expertise and guide you in managing these assets that ABSA has helped you build. Yeah. Because it has walked a journey with you. You can see the wealth that you've built. We now need to help you manage your wealth. And even for those who are building their wealth, we need to manage and help you build that wealth in a more, in a better environment with a lot more guidance. You need a proper financial partner who can help you in this journey.
Then what products do you, what products then did ABSA Investment decide to say, these are the products that we're going to have for our clients?
When you look at the traditional fund managers, one of the things that they have done is served institutions primarily. So you have a lot of pension management, a lot of corporate management, but you have not seen retail service being done. You have not seen someone who's coming to serve the individuals. Yeah. So when you look at ABSA Asset Management, we are very clear. Our core business is serving the individuals. It's serving the retail segment. And since COVID, we have seen the interest in money market funds grow. But that interest has grown because we are very clear that even as that grows, we need to introduce these products to you and guide you in making those decisions. Because you're going to a level where you want your money to work for you, you want to make those decisions, and we have served primarily retail. More than 90% of our business is for individuals, because we can see where the challenge is. We have the solution to offer. A lot of these conversations that we're having today are conversations that were held in boardrooms, conversations that were meant for institutions. They were not meant for individuals. Nobody told individuals that your money can work for you. They don't have to sit idle somewhere. It can actually work for you, earn you something. There are better ways of managing the risks that come with where you put your money, so that you don't end up losing the capital that you've built. So the capital has come in, it has been built. The products that we primarily offer are what we call unit trust, in a trust setting. What the regulator has done with the Capital Markets Authority is provided for ways of being able to manage products a lot better. So what we call collective investment schemes or unit trusts in this case are a regulated channel. It's you and I and a couple of other 1,000 human beings. You come together, you bring your 1,000 shillings, another one brings their 1 million, because the minimum is actually 1,000 shillings. You bring your money together and we manage it for you. Because the challenge we have is that if you try and figure out how to do with your 1,000, what to do with your 1 million, then the end result is you may lose the money. But when you bring it together and you pull it in a collective form, and appoint a fund manager like ourselves to manage that, it becomes a lot easier. I have the expertise. I've been doing this for a long time. I've seen what markets can do. I've seen the advantages that you can take in a market to be able to sustain this money and still keep the capital safe. Yeah. Because you've worked extremely hard for your money. The worst that can happen is that you lose that money as you chase return. Because if you lose that money, even the return disappears. So you'd rather have your money safe even as you chase the return, which is the work of an asset manager, which is what we do. So you have money market funds both in dollar and Kenya shillings. We have what we call a fixed income fund. We have what we call a balance fund. And we also have what we call an equity fund that buys shares. So we have primarily 5 offerings that we offer. On the money market fund, we have a shilling and a dollar. On the other 3 offerings that we have for the individuals, we have what we call a fixed income fund. What a fixed income fund does is that it offers you fixed income. So if you go to a bank and you borrow, you pay a constant or a fixed fee, or rather you would pay a rate that is fixed in this case. But in most cases, what we have in banks is a variable rate. Where interest rates go up, the rate you're paying your loan goes up. What we are trying to offer you, and what the government does, is when it borrows, and most institutions, they do not have a variable rate. What they have is a fixed rate. But you need to be able to establish, how do I lend this money to either the government or anyone else, to make sure that even as I earn this money, that rate is competitive and it's actively managed, because these assets can be sold. The beauty with financial assets is that they're very liquid, unlike real estate or real assets. So that ensures that as you work with a financial partner, they're able to make those decisions for you. They're able to buy and sell these assets and earn you a fixed return that you're comfortable with, which is what a fixed income does, and a fixed income fund does. So it earns you a return that is constant without exposing you to significant risk. Largely what it does is lending, and most of that is lending to the government through bonds and bills. But it also lends to banks, because a deposit is actually a lending to a bank. And if you come with your 1,000 shillings to a bank, you may not be able to get a competitive rate. But if I pull your money together and I go to a bank with 200 million, 300 million, 500 million, then I'm able to get a rate that is competitive, that earns you a return that makes sense, even for your 1,000. And no matter how much you came in with, the return is shared according to how much money you brought into the pool. Then we have balanced funds. What we do with balanced funds is that we try to balance the beauty of having a fixed income return with having a return that may not be limited by taking ownership in companies. That is what shares are. You buy a share in a company, which means if the institution grows over the next 10 years, we have seen the growth that we have seen from the banks, the likes of Absa, we have seen the growth we have seen from Safaricom. As you buy your airtime, as you come and place your deposit in Absa, as Absa makes the money, you should get a share of that. So what we provide you is in a pooled kind of environment where we actually do buy these shares. And as the dividends are made, as money is made, you get a share of that. You actually are working with your financial partner, with these other partners, because if you look at your bill, there are a couple of institutions that you actually spend quite a bit on, whether it's Power, Kenya Power, and all these others. Why don't you use whatever you have in terms of your money to buy something in these institutions? So even as you spend and as they make money, they share with you, because that's what dividends are. They have made money in the year, they pay you a dividend. And as these institutions grow, just as the country is growing as well, you also benefit from that growth. So if the share moves from 20 to 30 shillings because you're spending more on power, you're spending more on airtime, you're spending more on your drink, then you should get a share of that back. But the only way you get a share of that back is by investing in the institution, or rather buying shares in this particular institution. So a balanced fund balances those, and then an equity fund, which is on the far end, buys primarily shares. So that's its sole purpose, to buy shares. The thing with shares is that you have significant risk. Why? Because institutions do collapse.
Absolutely.
Which means you're not lending now. What you have taken is, you're an owner. You have taken ownership. When you buy into something and you take ownership, then you have no limit in terms of what you can make, but you also have no limits in terms of what you can lose. Or rather, the limit is that you can lose all your capital. But then you can also make a lot of money out of it. If the institution grows to 20, 30 times of what it is in the next 10, 15 years, though it's very, very long term in terms of investments, but we manage that for you. We know when to enter, when to exit, and that is expertise that we bring on board to be able to manage these financial assets in a way, because you're not going to be able to have the view of the stock market every single day. It's tedious for you. You have other things that you're doing. So you want to take the headache away from you, whether you're buying or selling Safaricom, whether you're buying or selling Absa, at what time you buy or sell, how much of it you buy or sell, that's our headache. Let's make those decisions for you in a pooled environment and share the return with you, because we take a fee, but the rest of it is your money. We pay that out to you as an investor, and you make your money in the process. And we also shield you from the losses, because experience counts. Most of these decisions, expertise and experience, really does count. And ABSA has been around for a very long time. We have the experience, we have the expertise that is required to make sure that we manage your financial assets a lot better without exposing you to losses.
Let us go back to a point in the conversation where you say that ABSA's investment projects mostly on retailers, not pensions or corporates. What do you mean by saying that? Because somebody might be watching and they're like, why not pensions or why not corporate organizations?
Over the years, the asset management business or offering has largely been for pension management. Why? Because pensions are regulated. And we have large pensions that have existed for a very long time. Putting your money away for pensions, putting your money into NSSF, all that money is managed by somebody. So asset managers have primarily been offering services for that huge pool that they manage. That was okay in the older days when wealth had not grown in the country. But as wealth has grown, we have individuals that need these services and are able to pay for these services. And these services can actually assist them a lot. Because most institutions grow from the corporate side. If you look at the banking industry, most banks used to lend to corporates. They would lend to your EABLs, they would lend to the other corporates. They largely never lent to retail. Why? Because at the time also, there were a lot of risks that came with that lending. And the individuals did not have the ability to pay. So most of it was done from the corporate. But as the country grew, as we saw a lot more in terms of economic growth, as SMEs grew, as employment grew, because at some point in the country, the biggest employer was the government, or almost the only employer was the government.
Yeah.
You either worked for the government or you were struggling or you were in farming. But today we have SMEs that have employed people and what have you. So as the wealth has grown, they need to extend these services, just like what banking went through and banking was extended to the individuals, has come in, and asset managers are now extending this. But it has to be very intentional, because if you're not intentional about it, and if you don't see the pain that the customers are going through, then you may not be able to offer these services properly. Yeah. And the intention is to ensure that even as we do this, because we have seen asset managers that unfortunately have made investments that have significant risk, and people have lost money. So what ABSA is doing is to ensure that even as we bring these services to you as an individual, we ensure that we actually manage the risk significantly. Because you have seen the swings that come with it, you have seen the challenges that you are suffering from. So even as we bank you, we want to extend and offer you these services that we have primarily offered to pensions and corporates, to you as individuals, so that we can get you a lot more in terms of value and hopefully save some of the challenges you have. Because as you build your wealth, it's important to have a partner that you walk this journey with, in managing the wealth you have built and also managing the wealth that you're building. Because in the next 10, 20 years, this country will not be where it is. There's a lot of growth we are seeing. Economic growth is expected. A lot of investments have gone into it. We're seeing a lot of interest into the Kenyan economy. As that interest grows, as we see foreigners coming on board, as we're seeing a lot of these challenges that we have had in the recent past going away, then we do need somebody to walk that journey with you and help you make those decisions. Finally, a lot of it is educative. And that's why we are doing the kind of forums that you're seeing today. And last week, we also did have a webinar. We need to educate you and walk this journey with you, not just to make decisions for you, but to enable you to also make the decisions.
Yeah.
And that education and that financial education is very important. So that even as we upskill you, as we help you, the next generation will be able to make these financial decisions on their own and walk a lot better, walk a journey that is easier, because it's easier to serve an informed customer at the end of the day. An informed client means I can serve you a lot better. So that information, that education, is not just meant for those who are the wealth, it's also meant for the generations that are coming. So we want to make sure that even as we pass this information, let it go to the next generation. Let them know about this. Because the other thing that is happening in the world right now, if you look at the US, the baby boomers came off the world in the 40s. They are now older. A lot of the wealth they have built because they have experienced significant growth over the last couple of years or decades or so. That wealth is going into inheritance now. They are older, they're in their 70s, they're in their 80s. The next generation, is it ready for this wealth? The same thing that has happened in Kenya. When this growth came in 2002, most of the people who experienced that growth were in their 40s then. They are now in their 60s, they are now heading into their 70s. As they head into that, that wealth needs to shift hands. Is the next generation ready? Or is it going to be a scenario where wealth passes to the next generation and disappears? Yeah. So we want to make sure that even as this wealth changes hands and it moves, the next generation is ready, which is why we are very keen for education purposes, to educate the audience, to educate our clients, so they know how to manage their financial assets. And where they have challenges in managing their financial assets, we come in and we walk this journey. We have a sit down with you. We help you to make the decisions that will make sure that your financial assets are safe, even as you go out there and look for more money.
All right. I want us to take a quick break. When we come back, you're going to also help us understand how do these services and these products you have, how do they now stretch the shilling? And basically, where do we make the money from? Because, yes, it can be a service, but without understanding how I am making the money from a retailer's point of view, then it might not really make sense for me to buy in. But if I understand how my money is going to grow, then definitely it would be something that even our viewers should be able to consider. Keep it Science Breakfast, and we're going to be back after the break.